Good evening to all of you. It's a great pleasure for me to address all of you on our Q2 earnings for this fiscal year. First, we have had another exceptional quarter and have continued to deliver stellar numbers. First, I would like to say that our volume growth has been at 6.25% on a sequential basis. And our rupee term growth has been 7.7% on a quarterly basis and about 25.3% on a sequential basis. The dollar term growth is 4.7% on a sequential basis and 26% on an year-on-year basis. I think the most important thing I would like to highlight is a volume growth of 6.25%, and our international business has grown 9% sequentially. And almost all our markets except India and Latin America has grown over 9%. US, UK, Europe, each one of these markets in Asia Pacific all have grown in excess of 9% on a sequential basis. And in terms of industries, except telecom, all our industries have grown sequentially with a significant growth. At least 5 industry segments delivered a double-digit growth rate. Retail, energy sector, manufacturing sector, high-tech sector, all of them have delivered double-digit growth rate, and the energy sector delivered a 20% sequential growth. On the financial services, we did exceptionally well again and delivered almost 9% on a sequential basis. And our headcount additions is on target. We added at a gross level 20,349 associates, and our total headcount for the company is at 214,770 associates. Our utilization again is at a benchmark level at 83.1%, showing a very disciplined execution. And our attrition has come down on a sequential basis by 1.1%, and our IT services attrition is at 12.5%. From the customer point of view, all our customer banks have increased very nicely. We have added 2 more customers to 100 million plus category, making it 12 customers. And similar additions have happened across all the revenue bands. In terms of deals, we at least signed 10 large deals in the quarter and chasing at least 10 large deals currently. The order book has been very, very good, and the outlook is very bright. I have been traveling around and meeting with a very large number of customers during the last 2 months across markets. So is my team. And based on all the checks that we have done, even though the macro uncertainty continues and there is a lot of negativism, we are getting positive vibes from customers in terms of their IT spend going forward. Our customers are investing significantly in terms of driving efficiencies of their businesses, both in terms of getting standardized platforms for their application and getting an efficient infrastructure platform from a run the business point of view, and are also making commitments from a discretionary spend point of view, specifically in themes like preparing their corporations for digital consumer, preparing themselves for launching new products for new markets through innovation, at the right price point. Third, preparing themselves to launch their offerings in emerging markets and depending on IT for a cloud-based solution. And finally, on real-time analytics using new technologies like big data. TCS continues to invest in all these areas significantly, and we are not cutting back on our spending in terms of recruitment, in terms of R&D, and in terms of sales efforts. And we are working very closely, and our teams are staying close and staying relevant to our customers. Thank you.
Thanks, Chandra. As usual, we'll start the Q&A with CNBC Kritika. Mics.
Thank you. Congratulations, sir, once again. To begin with, can you quantify the Forex impact and also the constant currency pricing for this quarter?
The Forex impact is a negative 91 crores of rupees. This is a result due to two factors. One is, of course, the hedges that has matured during the quarter, and the other one is the time value money in terms of the existing quarters, that hedges that we have.
Okay, so a question to Chandra then. You've been maintaining, and you said right now that budgets are stable, you're not seeing any cuts as such. You've added 2 deals in the $100 million bracket and 10 large deals. Can you quantify across what sectors are you seeing the maximum spending coming in?
We have signed 10 large deals, roughly of the size of 100 million or more. And these deals have come 2 each from telecom, which is again a positive. And we are seeing deal signings in telecom after a long time. And banking and insurance, 2 deals each. Then 1 deal each in high tech, life sciences, retail CPG, and pharma.
Okay. In terms of geographic growth, can you give me an idea of North America and Europe? How much have they grown? You were saying that last quarter Europe had a certain amount of concern. How is Europe looking like for the next couple of quarters?
We have done extremely well in North America, UK and Europe. We have delivered 8.8% sequential growth in North America, 10.2% growth in UK, 12% growth in Europe.
Okay. And was there any impact on margins in terms of the number of employees that were taken in this quarter? I'm guessing that the highest impact on margins of wage hikes was factored in last quarter. Am I right?
So I think we have delivered excellent margin improvement of over 90%, 90 basis points. You have to see it in the light of promotion costs coming in and in the light of a massive increase in employees last quarter for whom the full salary it comes this quarter, and then a massive increase over 20,000 people gross addition this quarter. Even if the net addition is low, still after resignation still we have to pay for those people. So given all that, I think our operational teams and our finance team has done a phenomenal job of keeping the cost under control while completely supporting the business without pinching anything for the business growth. So it's a finite.
Okay. One last question, Kavita's glaring at me already. Ajoy, you were waiting to bring down the attrition to around 13%. You've done that this quarter. What are the levers that you had to sort of put in place to contain attrition, and is it sustainable at 13%?
As far as attrition is concerned, yes, from a levers point of view, has been employee engagement. Those initiatives that we have been driving, it's coming out with the desired results. But at the same time, I've been talking about seasonality of attrition. So Q1, because of the resignations that happens because people leave for higher studies, etc., those are gone. So these are the two factors which has brought down the attrition. One is effort initiated by us. The other one is the seasonality aspect. And as far as going forward is concerned, I would love to see it below this, but it's something that we'll continue to work on so that we improve our retention rates continuously.
Thank you.
Prashant from Reuters.
Sir, could you please elaborate on how the pricing environment looks going forward?
I think I've maintained it, and I would like to say the same thing. There is a marginal dip in pricing this current quarter, close to 90 basis points. And that's primarily due to a variety of factors. But overall, the pricing environment is pretty stable, and we don't see an opportunity to increase pricing in the immediate quarters, primarily because of the uncertainty in the macro. With so much negativism going on, you shouldn't expect pricing increase, but we think the pricing will hold with a plus or minus a few basis points.
Okay. The other thing is, you said in the release that the currency volatility is a cause for concern. How could you elaborate on that? How is it going forward? How is it going to impact?
It's very difficult to predict how the currency will move. If you take this last quarter, we had, if I remember right, 43.86 at the lowest point to 49.89 at the highest point. And you don't see that. See, in July you had dollar depreciating. In August you had pound sterling and euro depreciating. In September you have rupee depreciating. So all of this took place. And obviously in that kind of a volatile environment, it becomes difficult to manage the business. And that is the overall comment that we have done. But within that context, in terms of what we have delivered from the exchange, has been very good.
It wouldn't be so volatile in the coming quarters, so could we expect some...
we keep talking to so many people. I don't think any economist anywhere in the world has got it right. It's very difficult. I think we have to understand that this is the law of nature. Volatility is going to stay, and you've got to manage it.
Itika, Newswire 18.
Hi sir. Sir, you have been mentioning macroeconomic headwinds for the past 3 quarters, but now we see a very strong volume growth at your end. Does it mean that the worst is behind us? And if you could just throw some color on how the situation in Europe and US particularly is.
I can only tell you that we have delivered numbers this quarter in UK, US and Europe, which is extremely sound. At 8.8% in UK, 10.2%, 8.8% US, 10.2% in UK, over 12% in Europe is a very, very healthy trend. And we have deal signings. Out of the 10 deals I mentioned, 5 is in North America, 4 in Europe, and 1 in Latin America. So the deal signings are healthy, and we are not getting any nervous comments from our customers. But the macro is unstable, is worrisome, a lot of negativism out there. If you go to a newspaper or you go to a blog, you go to anywhere, you get only negative on the macro. So those issues are there. So I can't say everything is behind us, but the fact is we have been able to deliver a 6.25% volume growth, and we have been able to deliver the kind of growth in these markets that I just reported.
Kartika, Bloomberg, UTV.
So just talking about the deal, are you experiencing any kind of a slowdown in the execution of the deal or the deal flow at this point in time?
No.
And also if you could just share the demand outlook, how do you see that going forward?
As I said, the comments we have received from our customers are positive, and they are on course. They are not cutting back spending. There are no project cancellations that have been reported, and we are watching very closely to project cancellations, any budget cuts, any shrinkage of customer revenues, any plant shutdowns. So we have got a nice system internally to track any one of those. Any warning signals we want to be prepared for. But at this point there are no warning signals, and the pipeline is healthy, deals are getting closed. That's all I can say.
Any acquisitions and deals that you can share at this point that you're looking at?
If there is anything, I will tell you.
Kate Key, Bloomberg.
Hi there. First question for Maha. I was wondering, going forward for the rest of the year, what kind of impact do you expect the rupee to have on operating margins?
Okay. We have hedges. We have hedges to the tune of 2.5 billion. That figure looks big, but 1.3 billion is towards receivables that we have already raised. So it's really 1.2 billion over there. next 2 quarters largely and something beyond. So that is as far as the impact of hedges. I don't think it's going to have a very dramatic effect from the overall picture that we have. We have always said that around 46 is the kind of figure that we would like to have in order to be able to manage the margins and so on. If you ask me whether we are going to be seeing a 46 or is it going to be a 50, that is very difficult to answer at this point in time.
And second question is for Chandra. Do you agree with what Forrester is saying about IT services and investment in Europe for the next year? They're kind of saying that Europe is going to have the slowest growth of any geography in local currency terms. So what do you see happening with that?
So I think we take all these data points, obviously, whether it is a Forrester report, Gartner report, IDC report, or CIO reports from Morgan Stanley or Credit Suisse, any one of these, are based on certain survey. So we take all those reports into account, but we do our checks. We visit customers extensively, we ask them directly, so we see our deal pipeline. The best data point on which to go by is our deal signings and our pipeline and what the customers are saying, and we will look at everything else in light of that. And there may, from their point of view, what they have said is definitely there is merit in that statement, but fundamentally our size in Europe is not large enough, and our pipeline is good, so we should grow, is my prognosis.
Z Business, Amol.
So I would like to understand, on the visa front, US visa rejection, is it still happening?
From US visa rejection point of view, yes, the visa rejections are still happening as it used to happen earlier.
Okay. So you mentioned that you closed 10 deals, 10 big deals, and you're also chasing 10 big deals. The deals which you're chasing, can you just give us some sense of the geographies?
Right, it's across the board. We have a good pipeline in US. And at least 50% is in US, and another 3 or 4 deals in Europe, and then we have a couple of deals in Asia Pacific.
Bala from NDTV Profit.
Chandra, in terms of the challenges in the macro environment, what are you looking out for specifically? When you said there could be something that could happen in the future, what are you specifically looking at?
I think we look for any negative news. As I said, there are 4 or 5 things we look for. Any type of project cancellation, and then we get deeper into it to see is there a pattern. Any budget cuts from any of the customers with whom we work with, and any shrinkage of revenues on a quarterly and annual basis, any shrinkage in type of services from the customer segments or the market segments, and any plant shutdowns which is affecting us. So we look at all these data points. We look at financial services firms, we look at manufacturing firms, high-tech firms. We track each one of these. And as I said...
What about the debt crisis in Europe? Largely macro, not specifically business.
Yeah, but the debt crisis, when it happens, there are views about whether Greece will get bailed out or will not get bailed out. If it gets bailed out, what happens? If it doesn't get bailed out, what happens? Which banks are affected? That will eventually, immediately it will show. The moment we know which banks are affected, immediately we will know. See, you can't keep second guessing. We know this. There is a two disconnected world. If you look at the S&P 500 data, S&P 500 firms have collectively, cumulatively have registered the largest or the highest revenues and highest profits in the last 12 months. So while the macro is also has gotten worse in the last 12 months. So all these data points are there. So we need to be very careful, vigilant, watchful. Anything more than that, it's very difficult. Currently, my pipeline is good. My customers are engaging with us, are partnering with us. So we are building capacity. We will run a tight shop. We will run high utilizations. We are at 83.1. We may go to 84. We may go to 85 if required. And we know how to do it. The teams are ready. And we run a tight shop, but we will clear the bench.
But for 2012, do you expect any delay in closure of budgets or delay in spending by clients? What is the outlook for 2012?
As of today, I don't see any delays.
Even closure of budgets?
As of today, that's my view.
Ajoy, just one question.
I may change it 2 months from now.
2 weeks.
As of today, that's the data point.
Ajoy, in terms of the hiring guidance, any change in that from the 60,000 number?
No, as far as overall hiring is concerned, we continue to stick to 60,000, what we had planned earlier. And if you look at the hiring that we have done this quarter, 20,349, that is the highest gross that TCS has ever done. So this has been very strong hiring, and we will continue with our overall plan of 60,000.
Yeah, sir. Yeah, the financial product.
Couple of questions. First to Mahalingam. You mentioned that you have about $2.5 billion of hedges versus about 2.3, I think, in the previous quarter, which was an average rate of about 45. So it's 2.5. What is the average rate? If you could just clarify that.
We don't calculate it that way, but essentially you could say that we will be able to participate in the currency movement to the extent of about 40, a little over 47 rupees.
Second question is to Chandrasekaran. Chandra, you mentioned, if you remember, at the start of the year, that you expect pricing to uptick towards the latter half of the year. You just said that because of the uncertain environment, you don't expect that to happen. But do you expect your customers may come back to you and say that they want you to share part of the pain in the economy as well and take a downtick in pricing as opposed to stable?
So as I said, at this point in time, we think the pricing will be stable. We hold, it is stable. We are not seeing price decreases, and we are seeing price increases hard to come back. Even the scheduled price increases are hard to come back, but there is no decrease in pricing.
Two more questions. You mentioned about Latin America and India being the two markets which you did not see the high kind of growth. In fact, India you saw deceleration. If you could give us some color on that, on why you think that happened. And B, about telecom, you mentioned that after a long time you actually saw 2 large deals getting signed. So if you can give us your outlook on that sector, because that's been traditionally weak for several quarters.
I think India geography has not grown this quarter. In fact, we had a dip of 5%. So Indian revenues have gone down this quarter on a sequential basis. That's why the international revenues are 9% and the overall revenues are 7.7%. That 1.3 that you see is the dip. And LATAM has been muted. They have grown at 2.3% on a sequential basis. And I have always maintained these two markets are still operating without the right mix. We've got scale now, reasonable size, but the problem is we don't have the right amount of annuity business and discretionary business. We still have to sell a lot of discretionary business in order to deliver. And these discretionary deals have to get signed up, they've got to go through the board approvals, sometimes there is a delay. We have not lost these, we are down, but these deals have not been lost. So I expect these deals will come through in the subsequent quarter, maybe partially in Q3 and partially in Q4, and those revenues will come. It's not that those revenues have disappeared, but it's just that they cause volatility. That's the nature of the market, and we are working very hard on improving the mix so that we can reduce the volatility. If you look back 3 years ago, 2 years ago, 4 years ago, the volatility used to be even high. Currently, we have removed that volatility to some extent, but still we do get shocks. In terms of telecom, yes, we have signed 2 very, very important deals. Both are large deals and have huge potential over the next few years to become very large customers for TCS. They are strategic companies, and we are very, very happy to have won those deals. And we are pursuing 2 or 3 other deals with new customers like that. So telecom is encouraging from the deal signing and the pipeline point of view. I hope that we can close a couple of more deals so that instead of saying except to telecom, all the other verticals delivered a good growth, I can say all our verticals delivered a good growth.
Thank you.
Kenan, Dow Jones.
Chandra, if you are saying that there is no room to increase pricing or even scheduled price increases might not come through this fiscal, and everyone is cautious, so that relates to volume growth not coming in. So where exactly do you think you'll be able to find room to increase margins? Because
I thought I have said that volumes are quite good at this point in time, and the pricing may be delayed. I was expecting that we will see a pricing increase, but actually the macro uncertainty continues, and in fact it has gotten worse in some sense. So pricing increase may be hard to come by. That's the trend we are seeing. And from the margin point of view, we will work on all levers. We will execute better. We will look at utilization and fixed price projects execution, productivity, tools. We will look at everything else. But we are committed to work on margins.
And there were reports that you would utilize your cash to take over some captives in Germany. So are you looking actively at taking over captives or deals where you have to take over captives and get an outsourcing contract?
See, Keenan, I have to say the same answer. You have to ask the same question. So that's true. But the point is that it's very difficult for us to comment anything on speculations. We don't. And by and large, acquisition is something that we are looking. We are very active looking at opportunities. But one can never say that we will do a deal because that's the nature of acquisitions.
John from Mint.
A couple of questions to you. What are you hearing on discretionary spends? And also, what are you hearing about financial services? What's your outlook there?
As I said, we've delivered a very, very good set of numbers in financial services. It's about 8.8%. On incremental revenues, it's a very substantial amount of our incremental revenues. If you look at this quarter, this is the 6th straight quarter where our incremental revenues are more than 100 million a quarter. And so the outlook on the pipeline, the deal signings are there, new deal pipeline is there. So financial services looks at this point in time quite good, and there is also a lot of compliance work that's coming in. In terms of discretionary spend, customers are really focused on those 4 themes I talked about: real-time analytics and big data, digital consumer, innovation from new product launches, both in terms of time to market and also in terms of price points, and then preparing themselves for new markets and cloud paradigm for that. So these are the 4 areas in which discretionary spend is happening. A lot of re-engineering and transformation is happening. You can call it discretionary or you can call it run the business, because there is a discretionary investment required upfront in order to get the running the business costs down. And that's the way those deals are structured. There's quite a bit of that, both in terms of application and infrastructure.
We started with Kritika, we'll finish with Kritika.
2 quick questions then. Phiroz, can you give an idea about the performance of Diligenta this quarter?
It's as planned, on budget, on track. And we are pursuing some new business, which hopefully will close before the end of the fiscal.
Okay, how many deals have you added this quarter and how many are you chasing?
Business of that nature, you normally add 1 deal in a year. So we're hopeful we'll add at least 1 deal this year.
Okay. Chandra, taking a bit from Kenan's question, if at all you do make an acquisition in the next 2 to 3 quarters, how much would you look at spending? And you've already roughly spoken last quarter about the verticals that you're looking at. Can you just reiterate what are the verticals specifically that you would want to grow in?
Kritika, we don't have a constraint on the size. Okay, we can do deals of 250,000, 500,000, billion. We have a cash, and we think we have large enough now, and we should be able to digest today. So the size is not the criteria. The strategic intent is the criteria. Strategic intent has to be in 3 dimensions. From a market dimension, entry into a new market in a big way, or entry into a new verticals. We see markets have already said Europe is critical for us and Japan is critical for us. And from an industry point of view, we obviously are very interested in healthcare. We've been saying that for quite some time, but we have not been able to find the right target. Or any new technologies where we can get a leg up. Those acquisitions will be small, but will be strategic. So any one of these 3 strategic dimensions, we are on the lookout. And if you do it, we'll tell you.
Any niche product acquisitions as such?
Huh?
Any niche product acquisitions that you could look at?
It could be on these verticals. Any niche products can also be there. Yeah.
Thank you, sir.
Thank you very much, ladies and gentlemen. Please join us outside for a cup of tea. TV guys.